welcome back to Houston Real Estate Radio. I'm Shannon Register, and we have been talking about a lot of great stuff today. We've got more for you, more in store for you. We've got Dr. Jim Gaines on joining us, and we're going to talk about some predictions for the new year, kind of where we're heading. He is a research economist at Texas A&M University at the Real Estate Research Center and knows a lot about what's going on with the economy and with our housing market. So definitely want to get the scoop from you, Dr. Gaines, on what's coming in the new year.
Well, right now, a lot of uncertainty about what's coming immediately in the new year. Two big items at the national level that everybody's nervous or at least hesitant about, and that's Obamacare and the impacts of the different rules and regulations that are coming out of the Dodd-Frank mortgage bills. We were just looking at some of that this morning, most of which go into effect in mid-January.
Mid-January, okay.
Mid-January. So at the beginning of the year, at the beginning of the calendar year, there's going to still be a fair amount of uncertainty at the national level of what's happening in terms of healthcare. And the reason I mention all that is because of employment, number of people employed, and cost of employment to employers and hours worked and all that. Because first and foremost, to talk about the housing market for next year, we'd have to talk about the Houston economy. The Houston economy appears to be in good shape in terms of continuing on into 2014. The foundation has been laid in healthcare and the business services, financial services, oil and gas, energy industry, and so forth, that barring some unforeseen event at this point, Houston should continue, as it has been for the last several years, to continue to grow and add jobs and be prosperous. That being said, then we would expect the housing market
to follow along.
To also follow along, because that's fundamental to it.
Right.
It will be interesting to see if we can maintain the same kinds of rates of growth. We're experiencing near double-digit rates of price increase, somewhere around 8 or 9%, near double-digit, more than double-digit rates of increase in sales volumes year over year. Well, when we start measuring year over year, 14 back to 13, it won't look quite as good percentage-wise because 13 has been such a good year, unless 14 just turns out to be phenomenal.
Right.
And I don't think it has to be phenomenal.
No,
it's
got to level off.
In some respects, you don't want it to be.
Right. At some point, it has to level off. You don't want a housing bubble in our area. we certainly don't want that.
Exactly. And I have been asked the question: Are we undergoing with the kind of price increases? Are we in a housing bubble, price bubble? And right now, I don't think so. And part of the reason I don't think so is, what we're doing a little bit is making up for about 4 or 5 years of no price increases at all. And whereas normally we might be going up, say, 4% a year, well, over a 3 or 4 year period, that's a 12 to 15, 16% increase that you would have expected to have occurred that didn't.
Right.
So if we pick up 8, 9% this year, we're still not caught up, quote unquote, with the theoretical line, if you think of it as a chart or a graph, of where prices would have been had we at least gotten our normal percentage increases in those years. So I don't think we're in a bubble. It's not an unsustainable price level, given employment levels, given income levels, and so forth. All that being said, I think it will even out a little bit. I think we'll get better balance between supply, demand, that inventory to demand. I think we'll come back into a little bit better balance than what we've had. A lot of people who might have been on the fence about selling their house or wanting to sell or wanting to buy, which needs, they have to sell first in order to go be a buyer. They may come into the market more. So we'll see it. It's still going to be a good market. I mean, don't get me wrong. It's but we won't be reporting 13, 14, 15% year over year increases like we were this year.
Right. Dr. Gaines is a real estate research economist at Texas A&M University, and he's Skyping in today here on Houston Real Estate Radio, and we're looking at some New Year predictions, what's going on with the housing market. What do you see happening with new construction?
New construction will continue to increase. It's going to be up, good grief, about 20, 25% this year. There's still room for an easy another 20-25% next year, and still not be back completely into what we'd call normal levels of total construction. Be close, be close, but be there. The thing that may hold back some of the new construction is lot inventory. The home builders, especially where they want to build, where the highest demand levels are,
Right.
a lot of those areas are either already developed and the lots are accounted for by especially the major home builders, the big volume builders. But there hasn't been a lot of new land development in the last 2 or 3 years because of lack of funding, capital, the market, et cetera. And it may take us a couple of years for that to all catch back up. We still probably are looking at 2015, 2016 for that to completely catch up. 14 will be good for the home builders that are in position with land and lot inventory. That'll keep going.
Good. Well, that's good. We like those new home construction projects going on. So what about rental prices? You know, we had rental prices going up for quite some time. They're starting to level off. What do you see, what do you predict for the new year when it comes to the rental prices?
Well, it's going to be interesting. We're still gaining a lot of population. People are moving here in droves. In just the last year and a half, we've added almost 250,000 people to the Houston metropolitan.
That's a lot of folks.
Yeah. If that continues, and most of these people, when they first come in, wind up renting, at least for a while. The rental market now is also becoming far more pronounced as being bi-level or bimodal. In the sense, there's the multifamily market of apartments and that rental type, and then single family rentals, which has picked up very much in the last couple of years with investment buyers and other properties being converted from home ownership to rental. It would appear that market should still continue fairly strong. But with the buyer demand or with demand pushing toward ownership, it sometimes kind of takes away from rental. So I suspect it will be steady, small increase. I don't expect it to have a big jump. Also, we've got a lot of apartments going to come on market here in the next 6 months, 9 months that are under construction right now. And we'll have to see how those get absorbed.
What about investors? The cash buyers still going to continue to be out there in 2014?
There'll be some. I suspect it's slackening off, but there are still cash buyers. There's a lot of nervousness about the stock market right now, so a lot of investor types who have capital and have cash to invest are looking where to put the money. Real estate, particularly Houston residential real estate, still represents a very good investment class or category. And so I suspect we'll still see a fair amount of that.
For 2013, where was the strongest market in Texas? Was it Houston, or was there a stronger area?
If there was, it would have been Austin.
Okay.
Austin has been going and blowing on percentage basis and so forth, very much similar to Houston. I think right now, if I remember the numbers that I saw just in the last couple of weeks, there are as many new apartments under construction in Austin as there are in Houston.
You know,
and Austin is only a quarter of the size.
What about the master plan communities? Does Houston still offer the biggest and most of the master plan communities for Texas? Yes,
and you were asking where would submarkets in Houston be? All most of the master plan communities, if not all, are doing very, very well. The demand for properties there in the master plan communities, because of the amenities, because of the planning, because of the certainty, the home value protection and so on, the master plan communities draw very, very well. And that obviously they are suburban. They tend to be the suburban communities a little further out, all the way to the Woodlands and Bridgeland and Cinco Ranch and all of them. And I apologize if I'm leaving somebody out. Please don't get mad at me.
Well, I know Wood Forest was one that was doing really well. I think that one's going to continue to grow and be a draw for people here in our Houston area that are moving north.
Absolutely, absolutely. And then Inside the Loop. Inside the Loops continues to be, and it's interesting because there's a fair amount of construction going on.
There's a lot of construction going on.
There's a lot of construction, and most of it is replacing units. So net new units, our total housing unit count may not change. Although a lot of cases we're tearing down one and building two, townhouse,
right,
replacing a single family. But that inside the loop market is very strong, and then the suburban master plan communities, and then even some of the non-master plan communities in the suburbs that are strategically located in the better place are there.
Are we going to continue to have a seller's market in 2014?
I suppose so, in the sense that it's still going to take a while for that balance to come into play. I don't think it'll be a pronounced seller's market where you can just do anything you want to.
Right.
But for properties that are located in the communities and the neighborhood subdivisions that are in demand, where people want to be with a good property, sellers are not going to have any trouble selling those properties.
Good. I know a lot of sellers are happy to hear that. All right. Well, we appreciate it as we continue to look forward to the new year. We'll be back here on Houston Real Estate Radio right after a word from our sponsors.